Also switching gears here, investors keeping an eye on Japan, where the central bank's governor issued a few comments on Thursday that may mean the country exits from the ultra-low interest rates that it has had for decades now. Let's bring in Yahoo Finance's Jared Blikre. Jared, you're mighty good with the international heat map, so what do we know on the international front with Japan?
Well, I'll tell you what, this has been a long time coming. Japan has had ultra-low interest rates for quite some time. You have to go back to 2015 in the very beginning to get the last time they were even positive. And before that, since the global financial crisis, they were 0.1%. But it's interesting, this December meeting that we're going to have December, I believe, 18th, 19th, is now a live meeting. And we have a graphic here that shows interest rate hikes are now getting priced in for December. And the reason this is important is because this was unexpected. Traders didn't expect this to happen until next year, but now the bond market vigilantes are seeing the writing on the wall. There has been too great a differential between the interest rates in the United States and Japan, and so all this money has been flowing in to take advantage of the U.S. higher interest rates. That has been weakening the yen, and this is just unsustainable. I want to go to the Wi-Fi Interactive where I have a chart here. We can see that the yen here, this is when we go down, this is U.S. dollar losing ground since it's the first in this pair, but that means the yen is strengthening today. Let me show you a year to date, and you can see kind of an opposite trend here. We have the yen weakening for most of the year. That's the US dollar getting stronger. Now we've broken this trend channel, so technically we may be in store. This could be very well a top. And let me just show you a 10-year chart. This is the highest rate. This is the highest exchange rate we've seen in 10 years. You have to go all the way back to the dot-com bubble to see something that's even comparable. Now, another thing that I'd note is that Japan, we're talking about Japan hiking for the first time. The U.S. started that last year. This is a little bit of late to the party, but this is where Japan has been finding itself in the midst of the global business cycles for the last 20 years. They are generally the last to raise. They're generally the last to cut. And so as the U.S. is thinking about cutting rates, Japan is thinking about normalizing rates. What implication does this have for the currency? The bond market there is so much about the BOJ that my concern is, and the concerns of traders, is that there's a disorderly unwind of this policy that's been so loose for so long.
I love that you took us back to the early 2000s.
You
with
bet.
this deep
Good
dive.
times.
Yes,
Good times.
indeed. All right, Professor Jared Blikre, thank you.
Thank you.